Good afternoon and welcome to the Hummingbird Resources PLC investor presentation. Throughout this recorded meeting, investors are being in listen-only mode. Questions are encouraged, can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish response where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Dan Betts, CEO. Good afternoon, sir.
Good afternoon, Paul. Thanks for the introduction and thank you everyone for dialing in. We are going to go through Hummingbird's Q1 operational and trading update and quarterly results, and then we will open the floor to Q&A and answer as many questions as we can. So hopefully this tech will work. Is that working, Paul, going through the slides?
Is indeed, sir.
Okay, so today on the call you've got myself, CEO, and you've got Ed Montgomery, Managing Director for Corporate Development for Hummingbird Resources. The rest of the finance team, Tom, Finance Director, is actually on the airplane flying back from Abidjan as we speak, so we will field any finance questions on his behalf. So to just jump straight into the numbers of the quarter, during the quarter Hummingbird produced 22,867 ounces of gold. Predominantly this was from Yanfolila, where we produced 16,999 ounces of gold, up on Q4 last year. The grade steady at 1.6 with an AISC from Yanfolila at $1,600, which is a reduction on Q4 last year, largely because of the increased ounces. During the quarter we sold 18,230 ounces of gold, a slight overhang from Q4 last year over the year-end and Christmas period. That's why the number is more than production. Revenue for the quarter was $37 million, and the adjusted EBITDA for the group was just over $7 million at $7.1 million US. From Carusa we produced 5,868 ounces of gold. Carusa is still ongoing operational ramp up, and there's a section on Carusa and the challenges that we have had there later in the presentation. At Yanfolila, we are maintaining our guidance for the year. We were expecting a slightly slower quarter, heavier strip in the first quarter, and largely Yanfolila has been producing steadily as per expectations. So to get into the details a little bit, as I said, 16,999 ounces of gold produced and poured, 1.5 million BCMs mined at Yanfolila during the quarter, and ore mined 169,000 ounces. You'll see that ore number down slightly on Q4, entirely as per the mine plan, as we've been doing a lot of strip in the first quarter to prepare for the coming months. Ore processed at just under 350,000 tonnes. The plant is working well. Recoveries are good. Recovery slightly up. Feed grade as per expectations, and really no surprises in this section of the company at all. Health and safety record at Yanfolila has been excellent. Really credit to the team there. No injuries and nothing negative to report, so I'm very proud of the team's effort there. Also I should mention the Kamana East underground developments there. We are now 614 meters completed into the development. The development rate has increased significantly in the last few weeks, and that remains a priority area as we move forward through the year to access higher grade ore at Kamana East under the main pit. We have continued to engage and prioritize our ESG initiatives across the company. At Yanfolila, we have been building our second soap factory in the region. We have mended a number of bridges. We have built a community health care centre at Saloba, and we are also enhancing all the market gardens and maternity hospitals at Makinda. So I think at Yanfolila, community engagement has continued to go from strength to strength. At Carusa, we continue to ramp up on all our ESG and community initiatives. We have been doing a lot of engagement and training, bringing people from the community to site, letting them know what we're doing, a lot of education, and also sanitation projects out in the wider community, particularly with malaria prevention, water sanitation and health outreach programs. If I move on to the financial summary for the group, we sold 18,230 ounces of gold during the quarter at an average gold price of just over $2,000 an ounce. The AISC at 1,616, operating cash cost of 27.1 million for the quarter. So that gives us a group adjusted EBITDA of 7.1 million and net bank debt, net of cash and gold inventory of $135.1 million. During the quarter, we, from this position where we are now, we have 55,000 ounces of forward-looking gold hedged at a variety of cost collars, prices from $2,100 up. We put these cost collars on during Q1 to obviously ensure that we could meet our debt repayment schedule with the gold price rising. As the gold prices continued to rise significantly during the quarter, we have rescheduled some of those cost collar ounces by spreading it into Q1 next year to give us more immediate exposure to the higher gold prices that we are enjoying now. So we effectively picked up 15,000 ounces and pushed it into Q1 next year and spread that reduction across the next 3 quarters. So in simple terms, there's just under 15,000 ounces a quarter for the next 4 quarters obliged to these cost collars, giving us a guaranteed minimum price, which is good. This slide on the Duby project, where we are currently mobilizing drill rigs to drill a high-grade target at Bogangida. We are also engaged with DRA, who are optimizing the feasibility study focused mainly on recoveries and power, where we think there's opportunities to significantly increase the NPV of the project by reducing the operating cost and reducing the capex. Needless to say, this project, as a large project, is very, very leveraged to the gold price. The NPV at the current gold price is, as you can see here, up towards sort of $1.5 billion. So, I mean, it's a hugely valuable asset for the company, with us controlling over 53% of the asset. So moving into Kouroussa and some details on the operational situation at Kouroussa. We produced 5,868 ounces of gold in Q1. The gold produced against the reserve model has actually over-reconciled. We've produced more than we were expecting from the reserve model. So this is a great indication that the reserve model stacks up well. The plant has continued to operate extremely well, maintaining over 90% recoveries, even when we've been processing marginal grade ore, and really throughput and all functions of the plant operating at or above nameplate. So we're very happy with the performance of the plant. Obviously, Q1 has seen some very unfortunate obstacles to smooth progression to getting us to commercial production. Firstly, our Christmas present was that the fuel bunkerage system and storage facility in Conakry for the whole of Guinea burnt down. And that caused huge challenges for the whole country, really, to fuel the country and effectively cost a month of fuel supply to Kouroussa. And then recently we've had an ongoing situation with our contract miner, a dispute with our contract miner who has ceased mining whilst we are negotiating certain disputes over the contract. So those disputes are ongoing, and we are making plans to restart work with Corica or without Corica, depending how those talks go. That's obviously had an impact on our ramp up over the last month. But what I should say is that the mine is in a great position. This slide is very illustrative of both the problem and the solution. The white line, this is a cross section of the main pit. The blue blocks represent super high grade ore. And I should remind everyone that this mine is one of the highest grade open pit mines in Africa, with a reserve grade of over 4 grams a ton. The white line is where we should be in the pit, as per contracted volumes with our contract miner. And the blue line represents where we are. And obviously we're very far behind the face positions we should be in. And this situation and this deficit has perpetrated the dispute we now have. But we do have a subcontractor still on site. We're continuing to mine. If you see the highlighted area on the right, we've pushed down to access high grade ore. The grade has been coming through to the plant. The grade has increased, and we really are very, very close to high grade ore and continual high levels of gold production from Carusa. And once we get there, certainly at these gold prices and these grades, we remain absolutely convinced that Carusa is a cash machine that will generate a lot of cash, and things will develop very quickly once back into production. This slide illustrates the high-grade nature of the deposit, and this is from the next 15 meters ahead of us from grade control patterns. You can see that we are now largely through the depleted, weathered, mined by artisanal mining zone in the oxide ore, and we are at the transitional ore contact with fresh ore, and these grades are now available to us, certain parts of the pit, and will very soon be available as we get back to full-scale mining across the pit. So things will turn around extremely quickly as soon as we start getting these volumes through the mill. So looking forward, we have 2 operating mines. Carusa has had challenges getting to commercial production, as we've explained and as we can explore more in the Q&A. But as soon as the volumes are going to the mill as per the mine plan, which will happen very quickly, this is a 200,000 ounce producer across 2 mines with diversified risk profile in the region, with a development project at Duby that I really believe is one of the best in class that has been slightly overlooked over the last few years. We are continuing to target exploration at both Yanfolila and Carusa, with active plans at both mines. With a relatively short mine life at both mines, adding incremental years or 2 years of mine life to each mine makes a material difference to the NPVs of the projects and obviously the equity value in those mines. And most importantly, our focus is on generating free cash to pay down our balance sheet aggressively and shore up the financial position of the company. And the group does have tremendous value. This slide shows the NPV of the group at 1,800 gold. Obviously, we're nearly 30% above 1,800 gold at the moment, and these values are way in excess of $1 billion for group NPV at current gold prices. But even at 1,800 gold, which is conservative, and including debt, the group NPV is just under $650 million, which I think shows the tremendous value within the company. And I am sure that value will start to be unlocked quickly as we pay down debt and overcome the commissioning or ramp-up challenges at Carusa. So in summary, we are a multi-asset, diversified, producing gold company with significant resources and reserves. We are a 200,000 ounce per annum run rate producer imminently. We have a very strong strategic backing and partnership with our long-term investment partners, Coris Bank and CIG Group. And as a result, there is significant equity upside as soon as we can deliver on this value and the market can see the cash coming through. There are a number of appendices and details with this presentation, which will be posted on our website. But rather than go through the appendices now, I think we will hand over to the audience, and we're available for any questions that you might have. So thank you very much for your time.
Dan, thank you very much indeed for your presentation. Ladies and gentlemen, as Dan said, please do continue to submit your questions just using the Q&A tab situated on the right-hand corner of your screen. Just while the team take a few moments to review those questions submitted today, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, guys, we've had a number of questions, both pre-submitted and throughout today's presentation. Monty, if I may just hand over to you just to read out the questions where appropriate to do so, and I'll pick up from you at the end.
Yep, thank you. And thank you everyone for sending through the questions. We've got quite a few, and I'll run through the questions, answer some of them, and then Dan for the other ones. A lot of them about Carusa, obviously, and some financial questions. So I'll run through them now. The first one is, when do you foresee the commencement of mining the high-grade ore at Koi Koi, which is at Carusa, including expectation of average grade, rate, and grade going forward? I can answer that. Well, we just produced under 2 grams a ton in terms of the ounces produced at at Carusa, and as per the presentation and per this chart we've got here, we are going to increasingly start to access the high grade ore. We expect the next blast in particular, which will happen in the next coming weeks, is where the high grade ore will start to be fed to the mill. And as per the release, we expect the increase in grade per tonne to start increasing going forward in the next coming quarters.
Monty, can I just add something there?
Yeah.
Yeah, I mean, if you look at the cross section I've left up on the slide, you'll see that there's still some strip to do before you access the high grade ore across the whole pit, but really that's about 1.5 million BCMs in total before you are at a steady access to high grade for the run rate of the mine. And at run rate of the mine, you're at over 4 grams a tonne, which I think is the key point. And 1 million BCMs a year is a month is what we should be doing a month. So really the timeframes are immediate, they're not long.
Then the next question goes into, for Carusa, can you define commercial production and when can we expect updated guidance? I mean, in terms of commercial production, is defined as where the point when all equipment is required for steady state operations is operational. We are aware about the market wanting to get a guidance update on that, and we'll provide an updated guidance once we are near the commercial run rate. And as per what we just talked about, we are going to start to increasingly access the high grade ore. But in terms of guidance for Carusa, we expect that to be delivered to the market once we're near that commercial run rate prediction. Then we go on to what are the main issues under contention in the dispute with Corica, and how is Hummingbird accounting for the disputed amount? Maybe hand that one to you, Dan.
Okay, well, first of all, we dispute the number of $27 million that Corica say that they have invoiced and we owe them. And secondly, we dispute that we owe it to them, because under the contract, any invoices are payable net of offsets, deductions, costs, and disputes, and the payments can be suspended. And in June or July last year, we served Corica notice that there was a deficit to contract and that their mobilization and volumes were behind contract. And since that time, obviously, there are a certain number of remedies available to us under the contract, but we have been working in good faith with Corica since that time to try to focus on the solution, which is to access high-grade ore and generate cash, and then there's potential solutions for everyone. But unfortunately, as it stands, they are claiming that we owe them this money, and it's clear to us under the contract that we don't, and that it's subject to, as I say, offsets, deductions, and apart from anything else, catching up on the deficit to the contract. And we have engaged Hitachi, who is the subcontractor at site, to extend their contract to bring further fleet to site, as we've explained. And there are a number of costs and issues that need to be discussed and resolved and aligned with Corica. In terms of the question of, and to conclude that, we obviously are trying to find a resolution with Corica. That's the most sensible way to move forward for the benefit of both companies. But at the same time, we have to make plans to move forward without them if they continue to maintain this position. And as per the announcement with Hitachi and mobilizing other equipment to site, we obviously are looking at all those options. There was another question that was about how we're accounting for this dispute. I mean, valid invoices from Corica have and will be entered into the accounts, but obviously all the offsets and expenses and costs will also be entered into our accounts, and the accounts haven't been finalized yet, but that's how it will be. That's how it would be accounted for.
Okay, we've got another question. Are we able to operate Carusa with a smaller fleet, say 4 to 5? We're operating prior to the suspension. Maybe Dan, you can articulate that one.
So what do you mean 4 to 5, Monty? Can you repeat the question?
Are we able to operate Carusa with a smaller fleet than the 4 to 5 that are operating prior to the suspension?
Well, so at the moment we are operating with the very small fleet that Hitachi has on site, and we're still producing gold, but not enough. But Hitachi will bring more fleet to site, and there are other contractors and other fleet available that can be brought to site. We can operate with a smaller fleet, but obviously the fundamental issue is the more volume you mine, the more ore you can access and the more you can process, turning it into ounces and cash. So ultimately we want to get to at least the contracted run rate of 1 million BCMs a month, which was what the mine plan is based on. In terms of the word smaller, if you mean smaller fleet, smaller trucks and smaller excavators and different spec of fleet, then yeah, there's lots of flexibility to do that. And one of the things about Kouroussa is some of the gold is contained in super high grade but quite narrow veins, and you know, maybe there's an argument that smaller excavators mining ore and bigger excavators mining waste and a different configuration of the fleet as we move through this challenge and find a solution is actually an opportunity to optimize things.
Then we've got about a question about, is the team on the ground in Africa engaging with Corica, and is there a timeline for discussions to conclude? Dan, what would you?
Yes, so I mean, obviously this is a challenging issue. We've all been totally engaged with it. I am back for quarterlies and board meetings at the moment, but the rest of the team is all actually in Abidjan and West Africa as we speak. I mean, it's our top priority to resolve this issue, and we are actively engaged, and I can't give a definitive answer on when the issue will be resolved.
Understood. Are there any other potential issues at Kouroussa that could push back this timeline further? Maybe a quick answer on that one, Dan.
Well, mining is inherently risky, as we saw with the fuel depot blowing up. But I think that, as per the presentation, we really are in great shape. I mean, it's a very unfortunate situation we all find ourselves in, and we've got to work through it. Those are the facts. But the pit is in good shape. We have access to high grade ore. The plant is working. Everybody's on site. The people are recruited and trained. This is an immediate solution available to the company. It's just access to the right fleet and the right time. And as we've already said, we've already signed up an extension to the Hitachi contract in the immediate term, and equipment is already being mobilized to site. So it's difficult for me to say that there can never be anything else in the world we live in, but I don't think so. I think that we're managing this in the best way we can.
There's a question about why did Corica fall behind on the contract in the first instance, and is this an issue that another contractor might face going forward?
It's a great question, but I think a lot of it is conjecture, and really it's a question for Corica. And I am mindful of venturing my opinion for the record in case I'm wrong. Like, who knows why Corica fell behind on the deficits? And I believe that it's a question they need to answer, and I can't really answer that question.
Understood. Another one on Corica. Given Corica's poor performance to date, should the company not bite the bullet and terminate contract and instead proceed with alternative contractors? I mean, well, maybe you can answer that one, Dan, but we're in discussions with Corica. We are moving forward with other contractors. Anything more you want to add on that one?
Well, I mean, look, I think the situation is simple, that much as we have a dispute, we have a disagreement, and I think all our energy needs to be on finding a solution. And the best solution for us and for Corica is to expedite a resumption of work. And we need to give every opportunity for that to happen. But if it can't happen, we're not scared of moving forward in any way we can. I mean, obviously our ultimate priority is to deliver gold and cash and value for our shareholders. So we are pursuing dialogue with Corica in as positive a way as we can to try to find a way to resume work and resume relationship. But at the same time, we are obviously having to examine every avenue open to us to resume operations.
Understood. And then do you use Corica in Mali? Are there issues at Carusa likely to affect operations at Yangfalila? I mean, maybe I can answer that. We use RMS contractor in Yangfalila. We do have some excavators from Corica at Mali, but they are under a separate contract and they're operating well. We are looking at mitigation measures if required, but unlikely, and operations are running well at Yangfalila. Not sure if you've got anything further on that, Dan.
No, that's right.
There's a question on Mali. Are there issues in Mali having an effect on the operations at Yangfalila? Have you held discussions with the government during the quarter? Maybe one for you, Dan.
Well, yeah, I mean, look, first of all, the question is, are there issues in Mali? And I keep getting this question from investors and people. It's like, there's obviously bad news about Mali and the political direction, but there are no new issues. There's just a government that is keen to maximize its revenue and take from the gold mining industry, and it's challenging the industry and the existing license regime to see where it can get extra revenue. I mean, we have an ongoing constant dialogue with the government of Mali that I think is extremely productive and positive. Operations at Yangfalila are ongoing and steady, and no, the answer is no. There's been no interruption to our operations for political reasons. But I think, you know, the noise and the news in the market that things are difficult is probably representative of the wider region in the Sahel and West Africa. And there are definitely changes and political challenges afoot that we all need to keep our eyes on and keep abreast of, and keep an open dialogue with all the relevant stakeholders.
Question about what is the rough feed grade profile at Yangfalila for the remaining quarters of 2024? I would say roughly around these type of levels for the remainder of the year. I would note per the release that we have had a lot of progress at the underground mine, and obviously there's a higher grade feed source that once it's hits the commercial rate will hit the mill. So that once that kicks into gear, we'll start to expect to see some increase in overall grade feed to the mine. In terms of Dugbe, how is Dugbe progressing? Can you give us any further update on that, maybe, Dan?
Yeah, I mean, so since we restructured our investment into ownership of Pasofino, so we now effectively own 53% of Pasofino and therefore 53% of Dugbe, I am positive, really positive about where the project is at. I mean, we have an operating team on the ground, as I say, cutting access to Bogandjida, which it's always been a high grade target. Originally, it wasn't part of our license, and then a few years ago, we bought it into our license. It was previously drilled by an Australian outfit, I think called Stanley Drilling. I can't quite remember, but they had some good hits, and we are looking to drill those targets imminently, this quarter at Bogandjida. And I think, the idea is if there was even a few 100,000 ounces of significantly higher grade ore, it could potentially transform the payback period and the startup of the operation, which would be a huge positive. But also we are working with DRA to optimize certain key things on the feasibility study, because the feasibility study was done largely in COVID when inflation was rampant, steel prices were high. I think there's a lot of things we can improve on the CapEx. There's a lot of potential developments and improvements in the power generation, which is a big part of the CapEx, and also with the recoveries of the plant, because recoveries on the project, because there were a very few samples that I do not believe were homogeneous to the whole resource that had much lower recoveries, and then those were used in the whole feasibility study. And I think that we can easily isolate certain areas of the deposit and increase the recoveries, which also have a very significant effect on the project. And if you look at companies like Asino in Namibia, just recently sold for $350 million, I think the exploration potential and the economics of the feasibility study and really everything about the Dugbe project in Liberia is better. I can come up with half a dozen examples. So I think it's probably the cheapest, best-in-class, shovel-ready development project that I'm aware of. And yeah, we're pretty excited about it.
I'll hand this one to you, Dan. Is Hummingbird vulnerable to a takeover given the current situation?
Well, look, obviously, I believe we're extremely cheap. And so in terms of equity value, I think obviously people would be having those thoughts. Not that I'm aware of any, but at the same time, I think we are... no, I don't think we're a takeover target. We have a strong strategic relationship with our shareholders. We're committed to resolving our ongoing operational ramp-up issues and focusing on our own operations. And I think, you know, these things are, it's easy to talk about, but they're complicated in reality. And I don't think so, no.
We've got a question about hedging, which I know you answered, but maybe you can just provide details on the current hedging strategy and their recent changes, which I think you answered, but maybe you can just articulate those again.
Yeah, sure. So during the quarter, when the gold price spiked up, we looked to take advantage of that by hedging, I think, nearly 70,000 ounces of gold, which obviously a third of our annualized run rate and less than Yanfleda's production. So not overexposing us to the commitment of, or the obligation of providing gold. But at the same time, we wanted to ensure that we locked in some of the higher gold prices should the gold price collapse again, you know, should it have just been a spike as it happened. So, you know, I think that was prudent. And philosophically, Hummingbird is not a natural hedger. You know, we want to give people exposure to the gold price as much as possible, and we'll continue to do that. But with a tight balance sheet and a lot of debt to pay back, it obviously seemed prudent to take advantage of that. And I think that was the right, responsible decision. As the gold price has continued to march upwards aggressively, we have restructured some. So we've paid down the first quarter's cost collars. And then for the next 3 quarters, we've effectively just spread them over 4 quarters, which means that there's a smaller obligation right now, and it gives us more exposure to gold at 23,500 right now, which is obviously very helpful.
A finance question. What is the likelihood that debt repayments will be pushed back that are payable to Chorus, and any further comments you can make about discussions with Chorus that are in the release?
Well, I mean, clearly the current situation at Kouroussa has put unforeseen stress on our cash flow and resulted in a cash squeeze that we are working through. It's made things tighter than we would have liked, but we are actively engaged on a daily basis with Chorus about how to manage that situation. And I'm confident that we will work together to resolve those issues. And yeah.
Understood. A question back on Dugbe. Apparently the Pasofino, in terms of potential third-party interest in the asset. Any comment we can make about those discussions previously?
Well, I think at these gold prices, suddenly Dugbe has become more interesting to a number of people. We are not actively engaged in any conversations with anybody in a way that we should talk about, but obviously I'm aware that Dugbe has become more interesting, and we will look to engage in all those conversations with everybody, because there's still a number of avenues available to us to take the Dugbe project forward, from building it ourselves, building it with a partner, or I guess ultimately selling the project if people were prepared to pay the right amount of money for it.
Understood. A few questions about debt repayments, rescheduling, so I think we've answered those. I suppose about, is Hummingbird in any danger of breaching any covenants or requirements of lending with Chorus Bank? I'd just say it's a pretty light debt package that we have with Chorus, and there aren't any covenant breachings or requirements that the company has on that front. I don't know if you have any further comment on that, Dan.
No, I'm good with that. I think, as you know, as I said, it all really depends on our ongoing good relationship with Chorus and ramping back up at Kouroussa to generate cash.
Understood. I mean, last question here about exploration and mine life projection for both mines. We've put a few slides in there. Anything further? I mean, we've got a program that we're going to start doing for both assets. Anything further you want to add about what was in the release, Dan, on the exploration as our last question? Yeah.
No, but I mean, obviously, when things get operationally difficult, the first thing people pull is their exploration budget, and I am really, really committed to not doing that. I mean, we see tremendous value, particularly at Carusa, where we haven't explored, and it's super high grade and a super endowed gold system. And I think there really is a great exploration story once we start drilling and developing that, which will extend the mine life and create great value. At Yanfolila, there's a lot of focus on the underground, which is obviously open, and you never know what you can find, so you've got to keep exploring, and we certainly have targets there that we are optimistic can add mine life in the open pits at Yanfolila as well.
Understood. So Paul, I think we can round out the presentation there.
Lovely, thank you indeed, Monty. Thank you very much indeed for hosting the Q&A and answering all the questions, Dan. Of course, any further questions do come through, the company will be able to review those. We'll publish response on the Investor Meet Company platform. Before redirecting investors to provide you with their feedback, which I know is particularly important to you, Dan, can I just ask you just for a few closing comments, please?
Well, first of all, thanks for your time. I think the company's at a extraordinary position, really. I mean, things are tight and difficult, and the market is well aware of those challenges. I think, as always, Hummingbird is very honest with the challenges it has. But if you can take a step back, you know, the immediacy of our access to high grade ore, the ability to generate significant cash flow, deleverage extremely aggressively, the exploration potential at Carusa, the hidden value within Duby that we are closer to unlocking than ever before, and where the share price is, I think that there's real opportunity here to change things very quickly. You know, we just need to keep our heads down and focus on solving the challenges we've got.
Fantastic. Dan, Monty, thanks indeed for updating investors today. Can I please ask investors not to close the session, as you now automatically be redirected to provide your feedback in order that management can better understand your views and expectations. This will only take a few moments to complete. I'm sure it's greatly valued by the company. On behalf of the management team of Hummingbird Resources PLC, I'd like to thank you for attending today's presentation. That concludes today's session, and good afternoon to you all.
Thanks very much.